Hi, and welcome to the fifth webcast in our series covering financial market insight and analysis through a Thomas Murray lens. Thomas Murray provides data and risk assessments on financial markets, infrastructure, and banks around the world. My name's Phoebe Jordan, Corporate Development Manager here at Thomas Murray. I'm joined today by Chief Risk Officer Anna Giraldo. We'll be shining a light on a trending topic: environmental, social, and governance risk. We're introducing ESG risk factors into our infrastructure assessments, starting with central securities depositories. I'll be questioning Anna on why we're including ESG risk, what factors we'll be considering, and how it impacts our current assessments. Thanks for joining, Anna.
Thank you, Phoebe. It's my pleasure.
Okay, fantastic. So, Anna, why did you decide to include ESG within your CSDRAs?
Well, we're always looking at including additional risks within our comprehensive risk assessment. This is based on international standards, trends, and just general best market practices. Just as an example, in 2013, for instance, we included a couple more risks: governance and transparency and asset safety.
Okay, interesting. So essentially, we're already looking at the G in ESG risk.
Yes, absolutely. Governance is a key factor and basically describes the processes through which an organization sets its objectives, determines the means for achieving those objectives, and monitors its performance against those objectives. Good governance includes motivations for a CSD's board and management to pursue objectives that are in the interest of stakeholders. In the case of depositories, these would be regulators, shareholders, participants, and investors in general, and that they support relevant public interest considerations. However, this year we decided to supplement our existing governance and transparency risks by adding the environmental and social components.
Okay, and what's really been the driver behind deciding to do that?
Well, as you know, ESG has become a hot topic and one of the key factors investors and organizations are taking into consideration for investment, selection of providers, and good practice in general.
Okay, then it certainly seems like something we ought to be reviewing. So how do we define ESG within our methodologies?
Yeah, good question. We have defined ESG as the risk that a participant may incur a loss arising from the depository not acting according to its rules and regulations, weak environmental or social policies, or not providing full and accurate information on its activities. This includes a loss caused by poor management decisions because of inadequate governance arrangements, deficient environmental or social policies, management performance, user group arrangements, and lack of disclosure of information.
Okay, then, so we're focusing on ESG factors causing a risk of loss. What factors do you include for the environmental side of ESG?
Yeah, since CSDs and financial entities in general do not have a large carbon footprint, the environmental factor currently doesn't have a significant weight in our methodology. However, all companies must have policies and procedures to reduce their impact on the environment. Therefore, we have included factors surrounding the quality of policies in respect of energy efficiency, use of renewable energy, waste management, paper consumption, and also around policy, travel, and commuting policies.
That makes sense. And it also makes sense that environmental factors would be unlikely to cause a risk of loss in an entity such as a CSD. What about the social component then?
Yeah, well, the social component is also, as you know, important for any entity. And we have included factors such as the implementation of a non-discrimination policy around gender diversity, health and safety, anti-slavery and human trafficking, as well as how active the CSD is in respect of investment into its local community.
Definitely policies that you want to see in place. How significant is the weight for these social factors then?
Well, I would say it's a medium weight. It is higher than the environmental component, for sure, but not as high as governance, because governance remains as the main factor when assessing ESG risk for depositories.
Okay, so let's talk about that highest weighting factor. Can you describe what is taken into consideration to assess that governance component?
Yeah, governance is the main factor in ESG, impacting CSDs, and therefore carries the highest weight, as I said before. Within our assessment of the governance practices, we look at the board structure and responsibilities, the governance of risk management, the management assessment, the inclusion of user groups and its influence in the decision-making process, and finally, how transparent the CSD is in terms of corporate and statistical information. The board helps us steer the depository in the right direction and ensures accountability with its stakeholder while managing risks.
Okay, so it sounds like we have upgraded our previous view on governance risk to make it more robust.
Indeed, it is an enhancement to our previous view, which was just on governance and transparency components.
All right, brilliant. And that makes sense. But so will ESG have a sub-rating within the assessment?
Yes, ESG will have its own rating within our CSD assessments in a way that governance and transparency will become ESG risk.
And so what about ESG's weighting within the overall assessment?
Yeah, good question, thank you. Our methodologies are permanently evolving based on best practices, and our overall risk assessment is a weighted average of the underlying risk components. Currently, we include 8 risks within our assessment. These are asset commitment, liquidity, counterparty, asset safety, asset servicing, financial, operational, and last but not least, governance and transparency. The weights are calculated based on a matrix that incorporates probability of an event happening and magnitude of that event. Following this analysis, ESG has been assigned a relatively low weight within the overall, but it is of sufficient size to be meaningful to our clients.
Okay, great. And so looking ahead, will ESG be included only in the CSD RA product, or will it be deployed to other risk products?
Well, as we all know, ESG issues impact several sectors, and you could argue it impacts any company. Since central securities depositories are financial market infrastructures considered as systemically important in many markets, good governance practices in particular are essential to maintain the stability of the broader financial markets. Other entities operating in the post-trade environment, such as transfer agents, sub-custodians, global custodians, and central counterparties, must also implement ESG practices as part of their business strategy to reduce risks for their clients. So the answer is yes, we will be including ESG across all our assessed entities.
That does sound excellent. There's increasing focus on ESG factors. It seems like they're definitely really important to assess. I'm really looking forward to reading the assessments once these environmental, social and governance factors are introduced. Thanks very much for updating us on the ESG developments, and thanks for your time, Anna.
Thank you, Phoebe, for your questions. It's been my pleasure.